Alright, welcome back. On this video, we're going to talk about mutual funds. You've heard that term before? Mutual funds are a collection of investments managed by a group of experts. Now, you can invest in mutual funds with very little money. And one of the benefits of investing in mutual funds is the diversification. You have what's called instant diversification. And some of the funds focus on specific kinds of investments, like a certain asset class, or a certain country, or even certain industries like the fashion industry, the tech industry, the green industry. There are a variety that you can select from. And some of these mutual funds have what's called a small cap stock. Now, that means they're smaller companies and they're riskier. They also have a higher long-term average return. Then you have what's called the large cap stocks. They're stronger, more stable stocks and less riskier, as you can imagine. They have what's called a lower long-term average return. And then we're going to talk about what's called growth stock. A growth stock tend to be smaller and tend to have their best years ahead of them. They have a high price industry ratio. And the basic understanding you want to get about mutual funds is what I like to share with people about. When you think about buying a stock from a mutual fund, you're like investing in a variety of stocks. So this is the way it was explained to me, and I like to share this with you. Think about a pot that you're cooking vegetables in, carrots, corn, potatoes, etc., right? That pot is the actual mutual fund. Now, when you take a ladle and dip that ladle into the pot and grab some of the ingredients, that's the stock that you're buying. You're buying a variety of stocks, which cause you to instantly diversify. You're not buying all one stock. You're buying a variety. So chances are that when stock prices go up or down, you're not going to lose everything because you're invested in several things, not just one, which is why it's a good idea to invest in mutual funds, right? And I thought that was a great illustration of how that would look to someone like you or I who are not really familiar with the stock market, because we can identify with that whole process, right? And we can say, well, I want to buy one stock, or I want to buy one share, and I know I've got AT&T, I've got Microsoft, I've got Facebook, I've got Twitter, I've got all those in the same mutual fund, right? If you want to go even more specific, as I indicated, you could become, I want to buy a Japanese stock, or I want to buy a Korean stock, or I want to buy only American stock. You can become specific like that based on how you're feeling, right? So always be mindful that once you make that investment, you want to invest for the long term, because there are systems in place where you can buy for the short term, become day traders. But that's not the system that I'm learning, and from my understanding and my temperament, that's not the system I'm going to be part of, because I don't feel comfortable with the volatility, right? The day to day, having to look at the market and being upset or happy, I like a kind of a balance, especially at the age that I am, right? As I get older and more mature, I don't want all the risk. I want the investments, but I want the sound investments, right? I want to put my money where, if I'm going to get dividends, which are quarterly or annually or semi-annually payments, then I want that to be consistent, right? Or maybe I don't want stocks that pay dividends. Maybe I just want to invest in stocks and go according to buy common shares, right? And mostly common shares don't really have dividends. Some do, but most don't. Most of the preferred stock have dividends. So, those are a couple of things you might want to look at if you want to get a payment coming in, right? Just depends on your investment and how you plan to set your portfolio up, right? Because it's based on what you want, totally what you want. But you should invest in something, real estate, your own business, the stock market. I suggest that you do all three. as you go, as you gain information, as you gain knowledge, a lot of times you're going to have an overflow of cash. You want to be able to put that cash where it's going to benefit you the most, right? That may be buying some real estate on the side, maybe a duplex, maybe a fourplex. If that's what you're interested in. You may not want that in your portfolio right now. You may simply want to do your own business and have stocks, or you may want to do stocks and real estate, or however you want to do it. But just make sure it's comfortable for you, but just make sure that you do it, right? SpeakWithLarry.com.